I appreciate you making time for me today. We're really
Sure.
excited to jump into the program that we've created at Vibrant. And just through having conversations with you, Paul, you really opened our eyes and helped us refine our program to provide value and bring some really great tools to communities that aren't in our backyard, but are clearly impacted by a lot of what's going on in your world. So I'll start by just saying thank you for joining me today. As president of Key West by the Sea, your perspective really offers a valuable real world lens on how recent Florida legislative changes have impacted condo associations and community leaders like yourself. And you're there on the ground with this bill and have seen it in real life. So rather than focusing just on House Bill 913, I love to explore how your board has navigated the evolving landscape over the past few years. So maybe just start with a small intro of yourself, Paul, and then maybe dive into that topic a little bit.
Great. My name's Paul Schuessler. I am president of the Condo Association at Key West by the Sea, and done that job for 3 years, and before been on the board 7 years total. So seen a lot of things that have happened in governance on condominiums in Florida. And when we're talking about the changes now that have taken place, that at this point has been capped by House Bill 913. If you've been in governance at all for a little while in Florida, you know that this wasn't in isolation, that there have been three bills over the past three legislative sessions that have all aimed at strengthening significantly the responsibilities of the condo manager and the certified manager and the condominium board. And they've been very wide ranging. So when you ask what has been the impact, I'm going to say it's been very dramatic. And I'll say that because when you look at the scope of these changes, it started with just the safety of the buildings, the structural integrity of the buildings. And then it was the fiduciary responsibility of the manager and the board to protect the funds charged to us by all of the owners. But not stopping there. So then we're talking about the training of those of us, the board and the condo management, the transparency to the owners, the record keeping, the storm preparations in terms of
Right.
what the legislature wanted us to tighten. And so I don't think saying that this was a dramatic change is an overstatement.
I would agree with that. And I know because you have been so involved with your board at Key West by the Sea, and obviously you've been part of the Florida community for a long time. So if we think of the broader picture and you think more, yes, this rocked everybody's world, but maybe take us back a little bit, Paul. Where would you say it started, or what really was the catalyst that brought these trio of reforms down on the Florida community?
Well, there's two things at play here, but clearly it was the collapse of Champagne Towers in the Miami area. Now it's been about 4 or 5 years ago. It caused one to put a microscope on the management of condominium communities. It was a safety thing. 100 people died. It was a terrible tragedy. And then some of the folks in the legislature said that we've got to take a look at other communities and see that, because this can never happen again.
Right. How do we avoid this? How did this happen?
Correct.
Some of those questions really started to come down.
Correct. Our approach to this legislation that came down started 3 years ago when the mandate was within 18 months, you would have to have an engineer come in and inspect the safety of your building. And this was a very extensive operation in terms of all of the infrastructure that made up the components of the building itself. And so we brought an engineer in, that report had been done, and we passed very successfully. But it does include things like concrete repair that is an annual maintenance responsibility. And we have been doing that all along, but now this has to be reported to the state in a very formal manner.
Sure.
So that's one piece, the safety of the building itself. But the second piece is that much of the safety that you guarantee is done through a replacement and a repair fund called a reserve fund. It's the common areas that a condominium shares, like walls, roofs, floors, those plumbing, those kinds of things that you all need to operate the building. Well, all of the owners contribute to a fund that will repair and replace that. The second part of that initial change was that we are going to separate that fund into two pieces now. Instead of having all one account that handled those funds, the structural pieces, floors, roofs, those kinds of things, are going to be separated from the amenity pieces,
Yep.
the pools, the fences, the driveways that aren't necessarily safety structure related.
Sure.
And so on the board, we had a responsibility to replicate what we were doing a second time to manage both funds.
And when you think about that reserve planning, as you mentioned, and there are a lot of financial institutions or even avenues to take to decide where you place these funds or how you manage the funds. What factors matter most to you? I'm thinking of things like liquidity, interest rate, NCUA or FDIC coverage, or something else entirely different. What factors come to mind for you?
Well, there are a lot of factors, and I want to just take, there are four of them, and I want to talk about those and then give you some real examples here of how they influenced the board's action, because now we're not doing it once, but we have to do it twice. These things and represent those. So, but you consider what we consider as safety. Certainly, those funds are protected. That's not job one of a fiduciary. Number two is liquidity, and I'm going to talk about us having to pay our large bills on time during the year and have funds available for that. The third one is the return. We certainly want to maximize and use that money, put it to work. The fourth one is ease of use, so that the board and the manager don't have to do this over and over again.
Yeah.
So let's talk about this safety. It's very important, and 913 reinforces the earlier bills and says that the safety must be the primary thing. We cannot put risk of those funds in front of the return that they might earn.
Sure.
So you have to have, in our mind, we have to have government-backed accounts that ensure safety. So the FDIC, the NCUA insurance is vital for us, and it always has been. I'll get to that a little bit later in terms of ease of use. So the second thing then is liquidity. We have on an annual basis paying almost $1 million in insurance premiums, and we have been paying them to avoid interest in a lump sum. Well, $1 million has to be available to us on the date the premiums are due. So to manage that, we have to ladder our investments so they become available on the time that premiums are due. Well, it's a big task.
Yeah.
Now, so liquidity is very important to us, that we can reach out and get our funds. Now, the way we have done it in the past, and this gets at the ease of use, okay? The way we've had to do it in the past to get insured is we've had to rely on $250,000 cap to get the NCUA or the FDIC insurance. That means for $1 million plus, we've had to use 5 different banks, 5 different institutions. What does that mean? That means that every board has to go out and open an account, provide their identity information, sign signature cards. And I'm getting a little emotional here because this is incredible work done times 5. And then we'd have CDs that would last 90 days or 180 days because of the liquidity issue. So we have to do this multiple times a year.
Rinse and repeat. Yep.
It was incredibly laborious for the manager and the board.
And I think the other part to maybe mention is you guys have full-time jobs, you have other responsibilities. Like this is something that takes out a lot of time. It's not always easy as, oh, we have to go do this, sign this. The idea or concept of getting you all in a room to be able to take care of all of this is probably not as easy as or preferred as you would want it to be, right?
Actually, that getting us all in a room to do that is a fantasy. That's where FedEx comes in.
Exactly.
So it was a real stumbling block to us. And I have to say at this point now, when we were introduced to the services that Vibrant Bank was offering. And I'm going to say that this is my granddaughter who did this.
Yeah.
She put the pieces together to give to me an idea of what Vibrant offered and how we could really make use of that to really make our jobs much easier and still meet the four things that we hold dear in terms of protecting our funds.
Yeah, absolutely. There's a lot to about, and not that there hasn't always been, but when it's a very defined, avenue, and it feels like probably more pressure or scrutiny for these boards and the positions that you guys have there. I know you mentioned homeowners and insurance companies, and what are some of the other areas that you feel like it's impacted that are touch your world but aren't just about the board? How do you feel like this is impacting residents or tenants or owners of these units?
Well, I think the hardest part about this is the communication to owners and the buy-in of the board and of the manager and the community that we serve. And it starts like this, Ashley. We work with our law firm, our advisor, and I would suggest that every condo owner use a condo management team to advise them because there are regulations that we have to comply with that are very serious in terms of we're responsible as the board to do. So to get the buy-in, so it starts with legal advice on what we have
Sure.
to do. And then there are many, many meetings with rules committees and budget committees and trying to get us to comply with that. And having all of that understood by the owners of
Yeah.
what we're going through and buy-in from the board that these are really changes that have to be made has been a part of the process. It's part of the journey. But it's countless hours and tens of thousands of dollars to get us to the point of compliance with where we are today.
That sounds like the definition of crossing your T's and dotting your I's.
And it is only because this now has the force of law behind it
Right.
that we have to perform these functions, or we could be in serious jeopardy if we're called on.
You mentioned that this goes back to, I think, over a year ago when you had your structural integrity test done and the SIRS study, correct?
Correct.
Correct. Okay.
Yes.
And coming out of that, you were in good structural position, you were in good reserve planning position. What does that look like for boards that aren't in those positions? So either there are big items that come out of the reserve study and or they realize that they are under reserved for some of those major items. What do you think that looks like if you had to put yourself in a board position where, as a result of that test, you were in different shape? What would that look like?
Well, in terms of starting this off, and you may not have a reserve fund that is at the level that's required by the law, and you would first find that out in your SIRS report, and it's quite detailed, and it tells you exactly what the deficiencies are in terms of the integrity piece of that, the SIRS piece, and the amenities piece.
Okay.
And you have to reserve both of them. And they both need to be at a certain level so that you can do replacement and repairs. So you'll find that out, how deficient you are. And it would be very smart then to consult an attorney. And I say that because you have to get the money one of two ways. You're going to have to go back to the owners and do a capital call or it's called a special assessment. That is the two most feared words in the condo community.
Yeah.
Special assessment. So you really don't want to go that route, but if you find that you have delayed what has needed to be done for a number of years, and that may be the case, those are the stories we hear. That is one of the avenues that you could take. Now, what the latest bill 913 has clarified that instead of having all that money that has been identified in your report as having to be in the bank, you could aug that amount with a line of credit, and that's been new now just this year. that they recognize that a line of credit would suffice for some of those funds needed.
Sure, sure. And that House bill amendment was designed to give more ease, right, to boards or relieve some of the financial pressure in the event that you are, under reserve or don't have the ability to just ask for special assessments that are quite large, especially if there are major items that come out of that reserve study, right?
Correct.
Understanding that correctly? Okay.
Exactly.
So it sounds like, and I'm learning a lot about this through, through different research that we've done, and our goal is to be a financial partner in this. For Florida condo board members and CAMs, and really people that find themselves in a position like that say, hey, uh, what do we do? What are our options? And I think that House Bill 913 does give and afford some of that flexibility. But thinking ahead, do you see the, other amendments coming down, or do you see different legislation that might come out? Do boards feel like they're prepared for this better today, or what do you see the future looking like?
Well, honestly, I think just to kind of project the future on legislation,
Yeah.
I think that boards are probably all over the place on this. But we have done is with each successive bill, we have gone to the getting legal advice on it, going into studying what it means to Key West by the Sea, then taking that to our various committees to process actionable items that we need to then change our rules, change our documents, change the way we prepared budgets, which has been significant with these different reserve fund requirements. So a process now that has been established in the past 3 years that we would rely on to do as new bills and new mandates come to us. But I want to answer your question. We continue to need insurance reform. We need as condo owners at the size of insurance coverage that we're needing. And these laws say that we need full coverage. We can't go into self-insurance. We need to have full coverage of our liability on our common areas. We need to have better access to affordable insurance markets. It's gotten a little better this year because there has been work at the legislature, but it needs to continue to help us. And that's not a surprise. We
Yeah.
see this all the time. The second thing I would offer, and it's related to that, and it's tort reform.
Hmm.
The community that has to serve its owners and serve people who come in and work in our community, and then something happens and they're not happy and they decide to sue us over this. And even if we are covered by insurance, we'll pay in increased premiums, even if we had done everything we could, but just to have this go away. Well, this needs to be continue to be looked at and streamlined, and so that abuses aren't happening.
Yeah, no, that makes a lot of sense. It almost feels like you're damned if you do, damned if you don't. I know we have a little bit of time left, and I would love to learn a little bit about some of the approaches that you've taken, just or lessons that you've learned. You're extremely knowledgeable about these reforms. What are some of those life lessons or things that maybe you'd like to share?
Well, a couple of things jump out. Being a board member, certainly it's all volunteer, and it's not for the faint of heart. Just think of the treasurer's position. That's the highest skill position on the board. And if you think about what it takes to be a treasurer and the skills you have to bring in, the accounting skills that you need, the business acumen, that is just a dedication that's above and beyond. And now, of course, what has in this landscape, we've just doubled down on the requirements for that and mandated training that we have to all go through. So you really need dedicated people who want to serve. When we have elections, it's always convincing people that they are the ones that are ready to serve and it's their turn. And it's so
So
that's a challenge.
what makes you passionate about that, or what gives you the I want to raise my hand? I mean,
Well, I love my neighbors and it's a very great community. And the biggest thing, Ashlee, is our manager, our CAM, is just a world-class person. And we've got 7 employees, but there's a tight-knit group, so that they turn the gears.
Yeah.
That makes this thing work. And then you don't want to let them down in the things that you're doing, right? So that community is very strong. But I will tell you how I started in this is I had been there for a couple of years, and I just wanted to get more information. I just volunteered to the president. I said, "How can I help?" And she said, "My God, we want to get you maybe you're on the board. You gain more knowledge, you get institutional knowledge, and you understand that it's your turn up, right?"
Yeah.
And that's how that kind of works.
Well, we've got a couple of minutes left, and I want to get your advice. Vibrant is heading down to Florida. We'll be attending the Palm Beach Condo and HOA Expo on October 16th, and then we will be attending the Miami Expo in November. So, as we
Great.
prep to bring ourselves to these two expos, what's advice that you have for me or any of the attendees that are going to be there?
I'm expecting that there will be law firms represented there. And I think it would be good for you to join up with them and tell them what your offering is. Locally, they had in the past struggled to get a credit union to come in and help. For other people, just absorb as much as you can. It's a journey, and there'll be a lot of information out there, I'm sure. Wish I could join you.
Yes, I wish you could too. And one thing I love is with open discussions like this is as someone who's been a part of a credit union for over 10 years, we need this type of exposure and learning and discovery. And we love, helping one another. We have a community ourselves. So
Yeah.
if we have something, a solution that might help, someone out, that's what it's all about. It's part of the credit union mission, and I certainly Vibrant's mission. And so hopefully we can help get our message and word out there a little bit. And I'm excited to, hopefully meet more people just like you, Paul, that allow me to learn more about your guys' community. And I think it's incredible, and I appreciate your time.
Sure. Well, don't forget your flip-flops, all right, when you come down to Miami.
I won't. I
Required wear.
won't.